All right, I'm gonna share with you a couple of deals that I did behind the scene, and then, well, I'm gonna share about two or three different ones and the intricate details of them. Okay, so you can see through a bit. Okay, so I bought this property back in 2003. That was my first property. I didn't know nothing about property. All I did was rented it out. I was making about 200 a month in net rental income. So after paying the mortgage, all the expenses, insurance, everything, I was paying about 200 a month. I was making about 200 a month, so net. Okay. Then this was in 2017 that I decided I want to sell this property. I put it on the market. You know, the valuation came at just under 100 grand. And I said, okay, what can I do to increase the value of the property? Okay. So I called up a few builders, just basic, paint, decorate. That's all I did. I spent 10 grand. Painting, decorating, just really making the property look nicer. Okay. This was before it was valued. So before it was valued, it was at 100 grand. Once I got the work done, I also changed the front window because it was really kind of run down and everything. I changed front window, front main bay window, and the door, the main door, and then painted, decorated. I spent about 10 grand. Do you want to make a wild guess to how much I sold that property for? Anyone wants to make a wild guess? Damir, Moro?
Jack, what was the value you bought it for? Sorry, I'm just remembering.
So it was valued at just under 100 grand.
When you bought it, okay, and then you did a refurbishment?
No, not when I bought it. This was in 2017, before I got the work done.
Right, okay.
After, when I spent 10 grand, all I did was painting, decorating, changing the front bay window and the front door.
Okay.
How much do you think I sold it for?
Ooh, okay.
150.
I sold it for precisely 138.
Wow.
So I spent 10 grand and I added value worth 38 grand. Minus the 10 grand, I made 28 grand extra.
Yeah.
Okay. I didn't do much. All I had to do was call a few builders, pick one, and they went and finished the work. That's all. Okay. There was nothing abnormal about the property. It was a standard terrace property in Midlands. Okay, it was in Walsall. And why am I sharing this with you? That you could pick a property that looks slightly run down, not massively run down, none of that. All it is cosmetic work, painting, decorating, maybe changing a really small bits and pieces, go in 10, 15, 20 grand down, and you can increase the value, double that money, sometimes triple that money. Okay? Just by painting, decorating, and presenting the property in a better condition. A new table, a new sofa, something as simple as that. Okay? I'll tell you about another one. So this one I bought in 2019. I have shared this previously, but let me share a bit more detail into it, a bit more depth into it. I bought this in 2019, December. It came in the market at 330. I want to share this again so you can always get a gist of this, right? It came in the market at 330. Before I could go or do anything, it was gone. Someone else took it. They couldn't complete for some reason. It came back in the market. I had saved the search on Zoopla. So when it came back in the market, I got that email as like a reminder from Zoopla. Remember when you save the search, a property comes in that criteria, you get an email, Zoopla, Rightmove, all of that. I picked up that email like 7 in the morning. Precisely 9 o'clock, I called the estate agent. I was in for a viewing by 9:30. I put in an offer at 280, rejected, 285, accepted. Immediately, I saved myself £45,000 because the seller was now desperate because they'd waited 3 months for the other person to purchase and they pulled out. So now they were slightly desperate. I just made 45 grand day one when I picked up the keys. Raise your hand if you know what I mean. Yeah. At that point, my wife decided we want to move into this property if you get a full refurb done. So I spent 85 grand. the highest spec possible. I'm talking about central London spec, okay? Engineered wood flooring to designer radiators to, full-on designer kitchen to, I mean, you name it, everything was there. It almost felt like a five-star hotel, okay? That was the level of the refurb that I did. I spent 85 grand on it. I got the property valued. It was valued at 500,000. So I did equity worth 120 grand by spending 285 plus the 85 plus obviously stamp duty and legals, which was about another 15 grand. So all in all, I was in at about 385 and it's valued at over 500,000. I did equity worth 120 grand. The only thing that came abnormal or extra in that property was, which was a part of the 85 grand refurb that I did, one was that there was not a lot of, so it was not insulated properly, which means that there was noise coming from the first floor to the ground floor. So there was extra insulation that I had to do, as well as there was some pipe issues when I did the 3-meter extension at the back, which costed me another just shy of £1,000. The insulation cost me about another 3 grand, about 4 grand extra from my normal expectation, which was a part of the 85 grand. Abnormals, okay? You'd always get abnormals when you're doing a major refurb. I did a 3-meter extension at the back as well as the side, and a full-on refurb to the whole property. This is literally a whole refurb. Everything was new in the property. Italian, sliding doors at the back, and I mean, you name it, we pretty much did everything that we potentially could to make it look amazing. We actually lived in that property for 2 years. We rented it out. It now brings, I think, roughly about 500 a month in net rental income after paying the mortgage. Okay. But remember, this property is in one of the highest capital growth areas, which is Slough. And we are keeping that in our portfolio for just capital growth. Okay. Another one that I did was the hotel, which we did literally last year. Again, with this property came in the market at 350. We bought it at 220. Someone came in, again, same story with this property as well. Someone came in, they gave an offer, they started the legals, they couldn't get a mortgage. Eventually, they pulled out. It came back in the market. I was the first one to walk in, first one to walk out. I agreed the property at 220. We completed the property. We paid all money in cash, purely because getting a mortgage was a lot longer process, and we were getting a really good deal. So eventually, we ended up closing at 220. Day one, we made 130 grand. Raise your hand if you know what I mean. Okay. We did a refurb of 25 plus another 20, about 45 grand. Okay. So the cost to us is about, let's say, 50 grand. So cost to us is about 270. It's now valued at 500,000. We made ourselves 230 grand after the refurb in value. Okay. Raise your hand if you know what I mean. I did a refurb of 8 rooms in the hotel, a full-on refurb. And we've now rented the property on a FRI lease at about £47,000 per annum. Okay, that's net rental income coming to us. Okay. Why am I sharing all of this with you? That, look, as long as you buy low, you will never lose money. Okay. It's like looking on a scale of 1 to 100, and the probability of losing money is decreased as and when you buy the property lower than the market value, for whatever the reason might be. I'll give you all the reasons, right? The hotelier, the reason they sold it cheap was because they were struggling through COVID. And when they came out of COVID, they were really struggling to fill the rooms. Okay. They didn't know nothing about technology. I walked in, they said, have you heard about booking.com? I looked at them, I was like, old school, they don't know nothing. I am good at IT and marketing and all of that. So that expertise came into the picture. So they were old school. They didn't really know the value of the property. I managed to pick the property at good price. Similar with the Slough property, the reason we picked at a lower price was 2 reasons. One was obviously when the first buyer pulled out, they were desperate. And the second was the seller was actually living out of UK. They were living in Canada. So for them, it was a lot more difficult to, find another buyer and, I want to sell it at market value. They were prepared to take a little bit of a hit purely because of the inconvenience of being out of the country. Okay. Okay. Just give me one sec, guys. Sadat, Ben, good to see you, buddy. Open your mic. I'd like to see you, Ben. Good to see you here. Don't know if Ben, you can hear me.
Yeah, I'm just listening to you in the background. Just
Ben,
just checking up on how you are, really, Joe.
All right, thank you, Ben. Thank you. For those who don't know, Ben is a very seasoned investor. Okay, it will probably take me another half a life to get to that point. But thank you for being here. I just hope and pray that if there is some value for you in this. Okay.
That's very kind of you. It's just lovely to hear your news stories. We haven't spoken for a while.
Good to see you here as well. Thank you, Ben. So yeah, those are the deals. Another deal that I did, and I might have shared this with a few of you previously as well, which is we took an option agreement on a large detached house in Wembley, and then we ended up we took the option at £1. Delayed completion 24 months later at a 1.1 million. And then we applied for planning permission. We got the planning permission for 8 units, that's 6 flats and 2 semis. And then we sold the option agreement at a 1.7, making a profit of about 600 grand. And our investment was just purely 20 grand on legals, architects, planners, and consultants in the picture. And that's another deal that we did. This is not me alone. There's another friend of mine that was a part of the deal. This is another deal that we did behind the scenes. Okay. All right, Sadad, welcome. Jack, good to see you. Jerry, Morrow, Natasha, Z. Sadad, so just so you know, we do these sessions and they're like a trial for the inner circle. If you'd like to know more about the inner circle, Sadad, there's a link in the chat box. You can click it's a 7-day free trial, and by all means, see if it's a strategy for you. And it's only £1 a day. Okay. All right. Thank you. So, what is it that you need to be aware of when you're looking for flip deals, development deals, conversion deals, the likes of the ones that I shared with you? The hotel was a conversion. When I say conversion, more like we kind of added, or not necessarily added, but converted a few rooms into operational rooms, which previously were not used. And there was lots of work to be done, including the electric work, the pipe work, the plumbing work, and so on and so forth. Just the electric work alone has cost us nearly 25 grand in that property, because we had to upgrade the electric coming in. It was a 1-phase to 3-phase, which just in and itself costs about 20 grand. So we had to get that done. But what do you look for when you're looking at deals like that? Okay. One of the things that I shared in the inner circle today, and those who were in the WhatsApp group might have seen that, which is you need to be aware of what's really happening with the way the council is looking at development in the region. Okay. Now, I shared a document for the Slough region, which is where I'm based, Slough and Middlesex, where Slough has taken some of the part of the greenbelt and have proposed development on the greenbelt itself. Okay. And at the moment, Slough Council, and I'm pretty sure most councils in the country anyway, because there's not being built enough in the country, so this would be most councils anyway. Slough Council is short of houses, which means that they're now taking smaller parts of the grey belt, brownfield sites, and even greenfield sites or greenbelt, and giving permissions to build houses on those sites. This is something I found on the council's website. You can actually visit your council's website or write to them, and they'll be able to give you something. Likely, you should be able to find it on the website without having to call them, ring them, or email them. You should be able to find that. The terms that you want to use while looking for, sites like that is local planning or 5-year plan of the local council or whichever council you're in. When you use those words, it should be able to bring you onto that link. But what does that do? So imagine if you found a site which the council has allocated, either it's a brownfield site, a grey site. For those who don't know the difference between a brownfield, greyfield, or a greenbelt site, is a brownfield is normally like a trading estate or a warehouse or something that's used for professional use or industrial use or whatever. That's normally like a brownfield site. A grey site is more like it's like a green belt, but it doesn't look nice. Like it looks very ugly or it doesn't feel nice. That's normally what's called a grey belt. And correct me for those who might have read this definition. I've not read this. It's something that I'm kind of learn on the journey. And then obviously the green belt is the green belt. But because there's a lot of shortage of housing in the country, now the council tends to get like a target to meet to build X number of houses in the council, which means that they have to go out and specifically pick on sites which needs to be converted into housing. Either it's a brownfield, grey, or a green belt as well. Imagine now you go and find a site like that, which potentially will get the planning or outline planning for it. If it's a really large site, which I came across one the other day, which is really large, 500 plus units. I'm yet to kind of get more details and depth into it. Imagine if you find a site like that. Those sites can be normally sold because a site of that size, let's say 100 units plus, not everyone would have the resources or the expertise to be able to do it yourself. In those cases, you can actually source those sites and sell them on to listed companies. So to give you an example, I personally know about 2 or 3 land procurement directors of listed companies. So you can reach out to me and then I can approach them. They normally pay a decent fees, normally 2%. Imagine if it's a 100 or a 200 unit site and we end up selling it to one of these listed companies, we get 2%. We're talking about making $500,000, $1 million just from sourcing fee, okay? At the same time, if let's say you find a site that's maybe a 5-unit, a 10-unit, a 20, 30-unit site that we can develop ourselves, bring some equity investors into the picture, raise the rest in debt and so on and so forth, which I can do at the moment. In that case, in fact, that's something that happened with Moro, and it's on my head that I made a list of potential sites, which one of them, Moro said that has eventually been applied for 22 units. A 22-unit development in Southeast London would be worth about 8 odd million. So when you come across sites like that, which, like I said, you can find on Land Insight, Nimbus Maps, and also the Ordnance Service site, which I've shared previously with most of you here. Those who don't have the link, please do ask me, and I'll be able to share this with you. But you can find sites like that. And also, I'll give you more detail when you join the inner circle if you haven't already joined. When you come across sites like that, and we go and I'd like to insist on this, right? The stuff that I've shared today in the inner circle in the WhatsApp group, that's really highly profitable potential. I'm going to pick on one person so I can speak with you, so you're able to speak through this. Moro, can I speak with you? Because it seems like you're kind of getting a gist of this a bit more. So can you?
I can put my camera on. Yeah, I'm cooking, but don't worry. I'll you see me in the kitchen.
Yeah, that's okay. You're cooking. I hope you're cooking something nice.
I am.
So the stuff that I shared today, have you had the time to have a look at this? Remind me, is it your birthday today?
Yes, it is. Yes.
All right, happy birthday.
Thank you, Jack. Yeah.
I picked it up on Facebook. Thank you to Mr. Zuckerberg as well. So,
yeah.
Happy birthday.
Thank you,
how
Zach.
young are you?
39.
39. That's good. All right. So the stuff that I shared with you on WhatsApp today, if you observe, there was a document which was greenbelt sites in Slough, which have been proposed for housing. Did you see that document?
I did. I didn't read it through it, Jack, but I did see you send
But
it. I
you
clicked
saw
on
the
it.
list.
I saw the list. Yes, yes.
Yeah. So you'd be able to find a list like that from your local council.
Mm-hmm.
Imagine if it's a, I mean, we're not going to go into 50s and third, 100 units and so on. Even when you look at a 10 unit site, okay, so those of you who don't know, when you go over 9, the social housing kicks in. So let's say we stick to 9 odd units, okay?
Yeah.
So let's say we stick to 9 years. Let's say you find a site that's a part of the green belt. The house, the council has gone on and they proposed this site for development. You go and speak with the local council. You negotiate a price.
Jack, 1 sec. Sorry, 1 sec. Someone's on at the door. Just 1 sec. Sorry, 1 sec.
No problem. No problem. No worries, Nick. Hope you're well.
Good, thanks, Jack.
Jack, I'm back. Sorry about that, Jack.
No worries. So I was saying that the list that I shared, you can actually find it on the local council's website. So not just Land Insight and NIMS maps and ordnance service sites and Google and so on and so forth. You can actually use local council's website to find development sites which may potentially be a part of the grey belt or the green belt, which have been proposed for development. And let's say you go and find a site like that from the local council's website. You go and negotiate that, and eventually you agree something. The likely is developing a site anywhere in the greater London area. We're talking about, sort of 500 to 700 a square foot, depending on the region and the location. A 9-unit website. Oh, sorry, a 9-unit site.
Yeah.
A 9-unit site. We're talking about, sort of 5 million odd in GDP. Okay, and even if you're working on, very conservative 20% profit margin, we're talking about, we're talking about £1 million in profits. Okay. Just showing you the potential of what's available, and not necessarily very difficult to find either.
Right.
Like, okay, so let me take you to a little bit of human biology. Okay, like just common sense. We are practically monkeys, right? We can copy paste very, very easily. Okay, it's not very difficult to copy paste something. Okay, and when you are in the inner circle, in many cases, I'm practically showing you what I'm doing behind the scene, and you're kind of copy pasting that. Okay, yes, you do get to a point where you now need to be more creative and think on your own toes, and how to improve. Not improve necessarily, but more like optimize the value of a site and so on and so forth. That's another story for the next level. Okay, but you can actually find sites like that just by following the basics of what I'm sharing, which, like I said, is ordnance service sites, Google Maps, Land Insight, NIMS maps, and local council's website. You go and negotiate a deal like that, you can make, even if you source a site like that, you can walk away with, imagine if it's let's say it's £1 million site, okay? And now let's say you don't have the money or expertise or, so on and so forth, and you go and source this deal to someone else. You can walk away with anywhere between 20 to 50 grand in sourcing. Okay? And I can assure you that it's just so simple. It's unbelievable. Like, as long as you sit down and read the local policy, as long as you sit down and read the 5-year plan of the council and the government. So remember, there's the government plan, there's the national policy, and there's the local policy. You have to sit down and read all of them, and you might think, okay, they might all sound very similar, except the smaller changes. But you need to sit down and read all of them, and what you would see is how sites come out of all of this, and you might be walking around thinking, oh, I read this in this document, in the local policy and the local map, and you look at a site walking around, you think, okay, this is a really good site for potential site. And all you got to do is then just walk up to the landlord and say, look, this site has potential. We may be able to, help you reach full potential. The site leading to you being able to make X amount of money based on the appraisal, working backwards. So those who don't know, you do need to focus on your appraisal. It's never an easy job to get and understand the depth of an appraisal, but it's, in essence, it's simple. You look at the GDV, you add or subtract the total development cost. Total development cost includes the build cost, professional fees, and the finance cost. Okay. Once you deduct that, and then you're left with the land value and the profits into the deal, that's mainly the overview or the eagle view of a development deal appraisal. Okay. But once you do this, here are a few things that you need to be aware of. Okay. When you look at a site, right, there are some abnormals. In the development world, they call them abnormals. You need to be aware of the abnormals on the site, right? Is it on a slide? There's trees. There is, ground issues. Is it contaminated? You need to find what was the previous use of the land. Sometimes there's lands that come out that, maybe in World War II, they were used for storing ammunition. There's sites which have been used as petrol stations, and a whole bunch of other things. Maybe a site was used for some warehousing activity that might have made it contaminated. There's a whole bunch of abnormals that can potentially come out. There can be a really big pipe running down the ground that you might not see. The soil, or like I said, the underpinning issues have to be looked at. There are lots and lots of abnormalities that you need to be aware of when you're looking at a site, which I can actually share the list with you. For those who might not have it, just ask me in the inner circle group, and I'll share the abnormals list. There's actually a list there that you need to be aware of. One of the sites that I came across some time ago was the site had a really big cable going above it, and we couldn't even find out what the hell it was or what was it about. Eventually, we didn't take the site, but there's a really big cable going up above that, which means that for us to be able to develop that site, we had to get rid of that somehow, which can cost a lot of money. Okay, that's exactly why they always put contingencies in the development cost, the total development cost, or sometimes the build cost, depending on how you appraise a deal. Jatinder, just send me a WhatsApp and I'll be happy to share that with you. So for those of you who are new to this, guys, this is a part of the inner circle. We give these sessions out once so you can try them yourself and see how they benefit you. Otherwise, if you want to join the next session, please, you need to join the inner circle. Please send me a WhatsApp message on, I'll share my number, everyone, Jatin, Jatinder. So you can send me a WhatsApp message. It's 0788 696 647. That's 0788 696 2647. Send me a WhatsApp message and I'll share the inner circle link. It's also already in the chat box as well, Jatinder, if you want to check. But by all means, WhatsApp me and I'll be happy to share those abnormals list with you. And like I said, those who are new to this, you need to be a part of the inner circle to join more than one session. One session is free. Like I said, it's more like a 7 days free trial for you. So you can see synergy, value, potential, and so on and so forth for yourself. Maybe if I may request Monik to share the inner circle link in the chat box. He is helping me today. Thank you, Monik. So those are the stuff that you need to be aware of. And going forward, I will share with you step by step on how you can first find these sites, how to quickly appraise these sites within 5 minutes. I call it a 3-phase due diligence level, okay? The first level is just literally 5 minutes, overview numbers. What's the per square foot value in the region for the new build? That's your GDV, potential, how many units you can put in. You can normally build on about, depending on the parking and a few other factors, you can normally build on about 50%, sometimes more. but 50% is just about a reasonable kind of a figure. Some locations you can build up to a bit more, maybe more like a 60, 70%, but 50% is a more reasonable figure. And you need to be able to see through how many units you can potentially put, depending on the president said in the region. This is stuff you can check online on the local council's website, as well as walking around. Once you do that, your per square foot construction cost, in and around London, it's Greater London size, you're talking about 200 per square foot. And then you need to be aware of your finance cost, which is normally about 10%, as long as you build it on time. And then you have your professional fees and so on. And with that, you need to add your contingency for the abnormals on the site as well. Once you do that, and then you add 20% profit margins, the likely is if you find a site directly with the landlord, you should be able to make a lot more than 20%, normally about 30 to 40%, maybe sometimes more. But 20% is just really the real minimum for you to be able to get debt funding, and even an investor to even considering coming on board. But that's where you are. So you can do a quick 5-10 minutes appraisal as long as you have a intimate knowledge of the area. The second level due diligence goes a bit more deeper into some of the abnormals into the property, and the potential of how many units you can get, and a whole bunch of other factors, which slowly I'll keep sharing over the next few sessions. And then obviously comes the third level of due diligence, where you need to speak with a builder, you need to speak with an architect, a planner, and a whole bunch of other consultants into the picture, depending on how many units there are and how complicated the site might be, and a whole lot of other things that come into the picture. Okay, in between all of this, there's lots of factors that I want to list it for you. Again, one session cannot cover all of this, but I'll start to kind of keep adding the factors as well as the abnormals into the picture, and the depth of looking at different development sites for you to be able to see if a site is worth appraising in the first place. Okay. I'm actually I want to make this session a bit more interactive, because I'm talking and I'm not sure how much of this is going through. So I can see top of the list. Nick, I can see top of the list. Do you have any questions so far for what I've shared?
No, I've just accessed our local council planning report, so annual monitoring report. So I found that just really, because I joined a little bit late. How do I then use that? Sorry, I've got into it. I found it. It's got
the document that you're looking at. What does it say at the top?
Annual monitoring report. Hang on, let me go.
Yeah. So annual monitoring policy is really the council keeping a track of what's happening on yearly basis, and then being able to meet their targets. Yes. Yeah. So if I was you, I would first look at the local policy. So they'd normally have a 5-year plan or a 10-year plan. Okay.
Yeah.
Look at that, and then following that is the monitoring policy. Okay. First, you need to read that, and then you also need to look at the proposal map of the region, which will show you where you can potentially build and where you can't build.
Okay. Yeah.
Okay. And then when you look at the local policy, it will show you how short they are on housing, and if there is any brownfield sites or grey sites or greenbelt sites which may have the potential or maybe has been shortlisted by the council for you to be able to pick up.
Okay, yeah, no, that makes sense. That. Okay. Yeah, and it gives a whole list of other documents that are associated to it. So.
Oh yeah. There's, I mean,
business
you'll be
completions and
sitting
stuff
there.
like that, business losses, and.
All right.
So there's plenty of good stuff there.
Yeah. So let me share something with you which I learned a long time ago. Okay. I learned this in probably 2003-04. Which was I've shared this story previously, but it's an interesting one, which is I met a property consultant back in 2003-04, and he said to me, what kind of money do you make? I said, why that question? He goes, tell me and I'll tell you a secret. Fine. I said, I make X amount of money. He goes, if you take 6 months off, and if you sit down and study property development and property flips, For 6 months, the money that you lose is double that money you would make in a single deal, as long as you do your studies and find the right deal. Now imagine you're looking at the monitoring policy at the moment, and then you sit down and read all the connected documents, which can take you anywhere between a week to a month, right?
Yeah.
And you might think, I'm not working. How the hell am I going to make money, right? I'm not doing anything. But once you finish reading all these documents, you will go and find a site, and you'll make 3 times, 4 times, 10x more money than what you would have made in losing that time in studying these documents.
No, it makes sense. I mean, I do property development full time, so
yeah.
it's
so
no-brainer.
I remember speaking with you previously, but yeah. So just wanted to share that. Yeah. Any other
Oh,
questions?
thank you. No, that's good. I've got something to work at. I can focus on that now. So.
Yeah. So the terms that you want to use is local planning policy, 5-year plan, 5-year local plan, the proposal guide, as well as the proposal map. Once you read all of these documents, you will get a very good gist of what's happening in the local council, and then be able to pick sites. Okay.
Well,
All right,
I'm
Moro, I can see you
in the local council as well. So
yeah. Moro, any questions?
No, Jack. Just that I heard what you were saying. So
Yeah.
basically, Jack, go to the council website, look at the local policy for the next 5 years. Correct?
Yeah. So if you want to write this down, I've shared it. I've shared this in the inner circle group previously, which is first the government policy.
Okay.
Second is the national policy. Third is the local policy. Fourth is the proposal guide, the local proposal guide, and fifth is the local proposal map.
Right. Give me 2 seconds, Jack. So that's the government policy.
I've actually written this in the group. If you scroll back.
Okay.
Yeah,
Okay.
I've
I'll get it from the
shared
group.
all of this in the group. Okay.
I'll get it from the group then. Go from the.
So
No, Jack, it's
once
good.
you read these documents and maybe a few more connected documents to it, because there's documents and there's some connected documents to it, you will get a very good gist of what the hell is happening in the local region, and finding sites becomes literally about 1,000 times more easy. Okay.
Okay, I'm definitely going to look at my region. Yeah, because it's because Jack, what you were saying earlier is true. Because I went to a town hall the other day, and well, not went today. We were walking around the town hall, and I overheard the people in the town hall speaking. Oh, we're really short on developers. We're really short on things. We have so many plots around here. We just need people to just come and get it. I overheard that. So yeah.
All right. Okay. Ben, sir, can I speak with you? Anything I can help you? Like I said, I'm nowhere close to your expertise, but if there's anything you'd like to ask me, I'd be more than happy. Or maybe just add something that you want to share with everyone here from your expertise.
No, I don't really have anything. I think people here seem pretty experienced themselves. So
thank you, Ben.
Thank you very much.
Thank you. All right, Damir, I can see you next in the list. Any questions?
Come on. No questions so far. Thanks.
All right, thank you.
Thanks.
Jatinder, would you like to open your mic? And if you have any questions, please do ask.
Hi, no questions at all this time. Thank you very much.
All right, thank you. Jag, do you have any questions, buddy?
No questions at this time, but yeah, just interesting listening to you guys. Thanks.
All right, thank you. Z, do you have any questions, buddy? I'm not sure if Z can hear me. Jerry, do you have any questions?
I don't have at the moment, but I think I'll stick to the ones that I'm focusing. So before getting to other thing else, I think I'll focus on the I think it was rent to rent HMO for now on.
Yes,
but
when you're starting out, yes.
Yeah, but I would say before securing a deal, because I still haven't yet started doing my planning permission, do you reckon I should set it up before securing a deal if I pitch it towards you? Anything
Set
else?
up what? Sorry, I'm slightly confused. Set up what?
No, because if I'm managing the property itself, I need a planning permission, right?
Yeah. So when you say managing, what are you managing? You're becoming. So you're kind of becoming either a sourcer or a developer. You're not managing
Well,
anything.
no, because I'm gonna manage the rooms, right? That's how we spoke on the phone last time,
Oh, you
remember?
mean the rent to HMO? Rent to HMOs?
Yeah. So
Yeah.
even
So
though
for that, you want to register a limited company. You never do stuff all of this on personal name. Getting a company registered is like a 10-minute job. You always do this stuff under a limited company.
okay, all right, then if I have any more questions, I'll just send you a message and we
Yeah,
can
no
go from
problem.
there.
So for those who are new to this, guys, and you're still at a stage of you wanna improve your cash flow. Sorry, if you have noise behind you, could you mute yourself? So for those who are new to this, if you're still struggling with your cash flow, you want to focus on rent to HMOs. This is a pretty decent strategy. HMOs are a growing market, which means rent to HMOs is a phase or a strategy that you can make quite decent cash from. You get to 5 or 10 units and 20 units, you can make pretty decent cash at the back of that, while you work alongside on flips and developments and planning uplifts and so on and so on. Okay. Natasha, I can see you next on the list. Any questions?
Sorry, Jack, I was gonna ask, do I need a license if I do rent to an HMO or not?
No, you
Okay,
just
cool.
need to be a limited company registered. As far as I know, you need to be ICO registered, which is Information Commissioner's Office. Okay, they send you a letter anyway once you register a company.
Okay.
Yeah, no, I can't think you need to be registered with anything else. You do need to have your limited liability insurance. AML, I don't think you need to, as a management company, I don't see why you need to be registered on AML. I don't even think you need to be registered with a PRS or a one of these associations. I don't think so. Again, you can check this stuff online. I
Yeah.
don't think you do need to be.
Okay, cool. Thank you. All
Yeah.
right. If I have any questions, I'll just send you a message. Thanks, mate.
Yeah, not a problem. Natasha, Sadat, do you have any questions? Sadat, I can see you next in the list. Do you have any questions? Grace, do you have any questions? Peace, do you have any questions?
No, thank you.
All right. So for those who don't know this, like I said, we're doing these sessions as more like a trial for everyone. If you haven't joined in a circle, the link is in the chat box, or send me a WhatsApp message. I'm more than happy to share the link with you, and then just see if there's synergy for you. And if you'd like to join, it's only £1 a day, and then you can join these sessions on weekly basis. Once you've joined one session, you're not allowed to join the next session if you're not a part of the inner circle. Okay, you do need to be a part of the inner circle to join more than one session. All right, guys, this is today's session. I'm gonna say enjoy the rest of the evening, and I shall see you next Monday at 5 o'clock. Have an absolutely amazing day. All right.
Thank you,
Cheers,
Jack,
Jack.
once again.
Take care. Bye.
Cheers, folks.
Thank you, Jack. Appreciate it.
Bye.
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 Bye-bye.
Thank you. Bye.